Channel. Today I'm going to be doing a software stock tier list, and we'll get into it. I want to do it based on quality. I'll do another one based on valuation, but and uh, and then like overall as investments, maybe just overall. But I'll just do this one. I'll still touch on the valuation and such, and there's some of them that I'm not familiar with. I might try to look them up on the video, but we'll just get into it. Adobe, based on quality. I'm an investor in Adobe right now, but I don't really like my position anymore. Not as much as I did. I think there's a lot of other businesses that are much better than Adobe. Like they're much stickier software and they are also cheap. So I just feel like this is a value play, value trap to a certain extent, because of how cheap it is. Um, in terms of quality, though, I mean, I use Adobe Express for my thumbnails and such. Whoa, what happened here? Okay. I use Adobe Express for my thumbnails and such, so I'm gonna, you gotta love the player. I still think they have a quality product. And to be honest, there's a lot of things that you still can't do with AI. And so until AI actually does these things for Adobe, like you can't even upload your picture on like Claude. Claude's gonna help you do like a YouTube thumbnail or whatever. But if you ask it to add your picture to it, it says that it can't, and that you have to go on an app like Adobe Express, like Canva, like another one. You know, it can't do photo enhancement. It can't. There's a lot of things that it can't do that Adobe can do at this point, and until they're like very strongly and well established into that, I don't think that they have any form of like impact on Adobe. I also do think there's a video by Arya Radnya, who's like a big Adobe shareholder, where they are in some where a creative talks about the use of Adobe and why it's like fundamentally implemented into the creative industry. It's the aspect of control, where you can't have an AI recreate a background and such, where Adobe gives you even though it can be much more more cost efficient to do it on AI and more time efficient as well. So just more efficient overall. The quality, the 1% that you get wrong with it, you cannot, uh, you don't have the ability to get it wrong in this industry. And so Adobe is I'm sorry, is very strong in that aspect. I'm gonna say, but I'm not deluded to think that it's a phenomenal software, compared to like other companies that I see here on this list. So we'll go with C. Also, guys, I never say this, but subscribe to the channel if you watch this video. I got quite a bit of content coming through. I try to post multiple times a week and different types. I'm gonna still do singular stock breakdown. I'm gonna be doing tier list. If you have a stock you want me to analyze, drop it in the comment. I will do an in-depth analysis, build a DCF, all of that. So that's what I'm gonna do. I just So subscribe to the channel and like the video and comment. Thank you. Next, so Adobe, I'm gonna put it C tier. Maybe I'll bump it up to B though. I'll see how these other businesses look to me, but yeah, for now I'll put it at C tier. I'm thinking it could be a B though. The only problem is that they haven't improved organically revenue growth. They've been decelerating for 4 straight quarters or 10 straight quarters, which is even more insane. They're decelerating by very small amounts, and so they're still a value play in my head to me. And they made a good acquisition which bumped up revenue growth, but it's like it's not organic, you know, revenue growth. So it doesn't really have much to do with the thesis when it comes to it decelerating because of AI and competitors and such. So I'll go see AppLovin. AppLovin, um, I'm gonna put at a B. I have it here. It's a stock that's trading a little bit heavy, like it's 43 of P ratio. But it used to trade in the 98, 79, 63. 43 is like, it's a little bit expensive as a value investor for a play. Sometimes, you just don't want to because there's a ability for downside there. But here's the thing. Look at their quarterly growth, man. This is absolutely gorgeous. Look at what's next quarter's expected. They've had 3 beats out of the 4 on normalized and solid beats. Okay. 3 solid beats on gap and one that's like an okay beat, but they've still beaten on their last 4 earnings, and so they should as well. They're expanding the types of so right now what they do, they advertise for own games, they advertise for other games on like mobile. So you play a game and you die, you do Wordle, you get the Wordle, or you just connect to the app, boom, there's an app that pop out, AppLovin. And other thing, and they don't own the games, they just own the distribution of ads. And the way that they do it is that they have a trained AI, which is called, I can't remember what it's called, you can look it up. But it essentially helps them with like, they do performance-based pricing. So instead of going to them, hey, I want 1,000 impressions, like, how much is that going to cost me? You come to them and you say, I want 10 downloads. How much is that going to cost me? They're going to put it into the AI, the type of game, the type of clients that they have to send it to, like type of people who play the games to send it towards, etc. They're going to come up with an approximative amount of impressions that they're going to need, and they'll charge you for that. And so as it gets better, and it's trained on an enormous amount of data because of the amount of success that they have in that space, and you can tell with the numbers. I mean, it's a beautiful company. I am, full disclosure, I am also a shareholder of AppLovin. It's a position that I might want to trim, though. We will see. I think I'm a little bit too diversified at the moment, but I love AppLovin. I love AppLovin. Look, so you have this. Okay, so last quarter they made 3.64 billion. This quarter, they're still growing. They're still going to be growing, and they're at 1.27. If they have that over 4 quarters, Q1, Q2, Q3, Q4, they'll be at 5 billion. Okay, you're talking about, and they'll be at more than that because they're going to be growing, and so they'll be above. They'll probably make around 2 billion of revenue, and maybe 140. They have strong margins. Margin have been expanding crazy year over year. I don't see how much better they can get, but I think they can still gain a little bit on margins. Maybe they're gonna have to decelerate margins a little bit though, because they're expanding the type of advertisers that they have, and so they won't be able to price as well with the AI system for now. But as it gets better, this is a strong moat. Like, this is a company that still has a lot of runway. I think they're currently really not that big. That's why I say that. Okay, $170 billion market cap. It is big. It's not humongous though. It's not like I think there's still runway there. I think it can become a half a trillion dollar company and such, especially with the moat that they have right now. So that is my take on AppLovin. I'm not gonna put it at B. I'm gonna put it at A. I think valuation is pretty solid. What's their forward basis? I think it was 30, 31. Oh no, it's on statistics, sorry. It's at 31 on a forward basis for a company that's growing, that's going to be growing like 30 something percent. They've been growing crazy with their margin expansions. Like, the earnings growth that they've had in the past year, from 198 to 364, that's like way over 50%. That's almost a 2x. And now they've done 1.27 on their last earnings, okay, in May. 118, here they grew by almost 300 million quarter over quarter, almost 100 million more per quarter. You're talking about like a very, very strong company that's doing a really big number, and that they're expanding their advertiser base more and more. And their AI is going to be trained on more and more data based on more and more different type of advertisers, because right now they're only game for game. They're only advertising games on games. But if they start having blue chip type of clients, candy companies, whatever, everything, e-commerce, they've added e-commerce, which hasn't been like as explosive as maybe they thought, but it's normal. It's always a network effect when it comes to those. Like, people are not going to jump at the opportunity. People are not that well versed into the advertising. Like, e-commerce, especially when you talk about brands that are a little bit lesser in terms of like value and such, they're not going to be as well rated. Oh, AppLovin started advertising for us, let's go to AppLovin. It's not really that. It's going to take a bit of time for companies are going to come to them certain point, and I think it will become like a bit of a network effect, especially with their performance-based pricing, because it gives you controllable outcomes, which is pretty insane. So yeah, I'm fine with AppLovin at A. I'm not familiar with Autodesk. Let me just do a quick Autodesk. Just do a quick look at it. 28 of P ratio. It's not that cheap. Is it strong? Strong growth. Okay. Quarterly. Doesn't seem too bad. Earning per share. No earning per share. Okay. What's it on a forward basis? 15. What does that company do? I have no clue what they do. I'm not gonna lie to you. Fig and ADSK. Which SaaS stock is a safer bet than AIR? I don't know what they do. Not enough info. Sorry. ServiceNow, which is one of my favorite companies out right now. They've had the Investor Summit Q&A recently, which was pretty cool. They reiterated that they want $30 billion of by 2030. That's what they want the public to see, but they actually are aiming at 32 billion, I think is what they said, because they were asked, that's like what we have as an external metric for you guys to look at, 30 billion by 2030 in AR. And now they're at 13.28. So they want a little bit more than 2x by then, essentially. Strong earnings last quarter. Nothing to say about that. They're first, you're talking about... That's not that good, though. I don't know what's happening here. What is this? Q2? Was their Q2 always weaker than their Q1? I don't like this. But, okay. Jeff to look at it. So there's trading on 23 on a forward basis for a company that has been growing annually, like at this rate. It's very, very strong. They have over 20% growth year over year, especially in earnings. They almost got $1 billion more, and now their first quarter was $1 billion. They're going to be they want to reduce stock-based compensation, which is abnormally high right now, but they do want to drop it by 5%. by next year, I think that they said. So maybe if they keep going that way, like I'd love to see them at, like right now they're at 15%, I think. I'd love to see them at about a 5% so that EPS, like gap EPS, don't get smoked every time. Because these are fake beats, okay? When you remove stock based compensation from your earnings per share, it's BS, okay? As a stock company, as a software company, it's completely BS because we are gonna, like, compare you to other companies based on this, based on your gap earnings per share. And so if you have 15% in stock based compensation that then you remove from this, obviously you're gonna beat that stuff. But it's a big negative to have stock based compensation of this magnitude. Um, but besides that, I absolutely love the product. They got the AI Watchtower that is going to be essentially a way to be able to control and keep an eye on the AI agents acting all over the company. They're also now they're becoming like AI native platform. They have kind of like a Chat GPT ish enter like a or Perplexity or whatever AI you want, but they have like an AI interface kind of when you go into the new display that they're doing. Besides that, they're also promising like AI. They're also integrating AI into all of their new contractuals. So it's going to be like the basic pricing for ServiceNow is going to include AI services for everyone, which that makes it interesting because companies are not going to be like it's going to keep the retention rate as high as ever because a company that's like, okay, we need the AI, we need AI integrated into this company right now, we're working with ServiceNow and such, and it's like you're not gonna, like, if you're not using AI about true ServiceNow and you're not really aware of it, it becomes a bit of a problem, especially when someone comes to you and say, hey, we're gonna do like software with AI agents a part of it. Like could have had an impact on retention rate. But when you include it in the most basic of pricing, first off, you have a bit of pricing power there, so you can move it a little bit upward because of the AI that's a part of it. And overall, it's it's bullish for the company because AI isn't. I think AI is a tailwind for ServiceNow and not a headwind. So I'm gonna go. I was gonna go S tier, but I don't like that. I'm gonna go S tier with the ServiceNow. Yeah, I absolutely love it. Also, I'm gonna go S tier right now for Microsoft. I'm not gonna go too deep into Microsoft. Super cheap right now. They have, you know, the most well integrated software in corporate America by far. S tier, I've done a bit of a breakdown in my prior video where I ranked the Mag 7 on the tier list. So if you want to look at that, you go right ahead. I think it's a solid video, and timestamps are in the comment like they will be for this video as well. Atlassian. I'm not that familiar with Atlassian, but that's a stock that I need to research actually. I think I might cover it. Atlassian. Is that it? No, it's not. Atlassian. How do you write that? Atlassin. Atlassin. Atlassian. Oh man, I'm not searching it. What's with the... Okay, I can't find it. Atlassian will go not enough info, but I might cover it in the future because I've heard a bit about it, and I think that Varun, who's like another YouTube channel that does stock breakdown, said that it was a strong company. I like his content, and I kind of believe him in the software industry, so we'll do that. Okay, what is this, man? Cadence. What is Cadence? Is that the one? That's definitely not the one. Not enough info there either. Alright, I'm not gonna waste your guys' time, so if I can't find it. Here we go. CRM. CRM. Okay, so CRM, they are customer relationship management. They are the primary customer relationship management software. They've integrated AI agents that is going super well for them. They own that part. It's for sales company, and sales is there to stay. Because well, it's the backbone of every company. If you don't have sales, you don't make money. So the sales team, they rely on Salesforce. It's very strong. I think people, for the most part, they like it. I've used Salesforce in the past, not extensively, but I've worked in positions where this was the tool that we had. I think I think it was I guess it was a good thing, but I really have no I had no attachment to it. Not like I do ServiceNow, because I do use ServiceNow and I love it. It's trading at 18 of P ratio. When you look on a forward basis, it is at 11. Strong year-over-year growth for the most part. This destroyed it. They beat on gap as well, so their SBC isn't like a problem like it is for ServiceNow. Their growth's a little bit lesser though, I find, and I think that organic growth was at the lowest it's been though, and it's not. They're growing based on acquisitions now more so. Um, I'm not too. I'm not. I bought Salesforce when it dropped after earnings because I thought that the earning was fine, but and it is cheap. It is cheap at this point. It really is cheap at this point in time. But I'm not that big on it. I think that they're gonna do fine, but I think they're pretty mature. I think they're a pretty mature company. AI agents can be a tailwind for them, but it's not as well integrated, I find, as a ServiceNow, because ServiceNow owns the workflow. That's the point. IT, HR, that's ServiceNow. Salesforce is for sales. It doesn't have the same um, necessity, I don't think. And in ServiceNow, for example, AI agents. I've done a breakdown on ServiceNow. Solo Star. I think it's my best performing video. You should look it up if you're interested in this stuff. But Salesforce, I don't think it's gonna be as much of a tailwind, but I think it can still help them, have some more organic growth. And um, I'm gonna put Salesforce at B. I do think it's better than and also I'm gonna put ServiceNow at A. I'm gonna put it a little bit above AppLovin because I love the way they're integrated into uh you know the software, like the workflow and such, kind of like a Palantir. No spoiler alert. CrowdStrike, I have no clue what that is. Datadog, I have not a lot of clue what that is. By the way, if you own some of these stocks and you think that I should look it up or whatever, should do a breakdown on them, should let me know. I'm interested in that. I've heard about CrowdStrike, but not more than that. I think they're a F1 sponsor. That's why. HubSpot, I have a little bit of info about because I know that they had problem with search, because HubSpot is like I don't think HubSpot's in a good position. Oh my days, man. I can't get anything. Okay, that's good. HubSpot, they are trading at what? What? Are they like growing like crazy or something? They had a bit of trouble with their last quarter. I don't know if it really shows that they had a lot of trouble. I think that quarter is completely fine, but on paper, I do think that search is a problem. I think that they are SEO, search engine optimization. They help with that for companies. So I'm pretty sure that they do. Do I have like an AI thing here? AI summary of the business, or I don't. Okay, uptrend persists. What has happened to their stock in the past 6 months? They've dropped 54, but they're still at 96% of P ratio. They have terrible margins. The SEO industry isn't going to be that stable in the next couple years, I don't think, because search is become like a Gemini thing. Now, obviously, it's not like search, but AI can have an impact on search in some way, which I don't think is necessarily like a big situation. Because I do think we'll still use search, obviously, even if it's for like the AI answer. I just don't know that a company that helps with SEO is in the best of position right now. So as long as they can keep delivering, they're going to be fine. As long as they can have customer growth, they're fine. But like I don't know. It's not an industry I know enough about, and I don't know enough about it to go to put it as like a company that is going to be top tier in the AI era in the next 5 years. Like it's not clear to me that this is gonna still be good. I'm gonna put it at C, lower than Adobe a little bit, but it has better growth. So there's that to keep in mind. Intuit is the tax situation. I'm not big on Intuit at all. Most of their revenue is from. Yo, I can't get a goddamn. Yo, how hard is it to find stuff on here? I know you're supposed to be using the into. All right. 16 of P ratio. I feel like it's more disruptible than Adobe even. To be honest, because Adobe has the enterprise clients. When it comes to Intuit, most of their revenue is based on what's that called? Tax. That's the one I use. TurboTax. Okay. I think they also have QuickBooks. QuickBooks is going to be fine though. I don't think that QuickBooks is going to be replaced. I think if you can integrate AI agents into QuickBooks, that's going to be a beautiful thing for companies. And I said most of their revenue are TurboTax. I could be wrong there. I love their QuickBook business. It's not clear to me that valuation is cheap. It's a cheap company. How strong is it? I think they could see like, are they gonna keep growing like that? Like, what? That was a strong quarter. I think they report. Yeah, they report. I'm not sure. I'm not sure what that happened. They report fiscally though. I think. I'm not sure. I don't know that they do though. Okay, I'm not sure what happens here. Um, they have good growth ish. They have like 408 to 481, 481 to 50. They have okay growth for now. They'll be fine, I think. They've beaten on GAAP EPS for a bit. Do I think that they're. I do think it's like kind of a vulnerable business for the TurboTax because my opinion is that TurboTax right now it has this, hey, we're not gonna get this, like, people don't believe AI to do their taxes and such. But in my opinion, if AI is able to save time for taxes, and which it should in maybe 5 to 6 years, I think people will, because people have this idea that they're kind of like holier than thou and that they're not gonna. No, I'd never use AI for that. But if it saves them time and they don't really want to take the time to do their taxes, they know that they can fill it. Hundreds of thousands of other people have filled it with AI and it's been fine. They'll just start doing it with AI. That's my opinion, because tax season is such a drag for people. People are always like annoyed at, it's tax season, all my days. Yeah, so, and accounting has been commoditized already. Like, you can have an accountant do your taxes for $40, unless you go to like a bureau. They'll do it, they'll take more money from you, but it's still commoditized. They're not gonna ask for 1,500 to do your taxes. Unless you have like corporate taxes, very high level, with big tax plays and such. It's not going to be the case. Intuit, I'm going to put in the same category as Adobe and HubSpot. I don't think it's that great. Oracle, good AI data center expansion. They're not all that cheap. They're not all that expensive right now. I mean, I am a shareholder. I was a shareholder, but I don't really like that stock overall. I'll be honest with you. I want to liquidate, but it's just that they were at so expensive, and I kind of bought. That was a terrible buy by me. I bought in the 200s, low 200s, like 205, 209. And it kept going up, and then I got destroyed. So, um, they have good growth. They have good growth ish, but they have such a big amount of debt that they're taking. They keep taking more and more debt. They'll dilute. Total debt 156 billion. Total liabilities, net minority. Invested capital. What's their, okay? Total debt is 156 billion. What's their operating cash flow? And my fault. By the way, I'm gonna get Fiscal AI so the videos will be better. Free cash flow. Okay, what's their operating cash flow? 31 billion, dude. I'm not touching that stock. I get that they can do fine with they can do fine. They still have like the cash flow, but it has to. I really don't enjoy putting myself in these debt plays, especially with the concentration of AI players that are going to be paying for these data center and such. If OpenAI decides to stop or whatever, I think it's going to cause big problems for Oracle. Like a OpenAI isn't solvable enough to cover the amounts and their obligations or whatever. Now I'm gonna put Oracle. I'm gonna put it at D because I don't want to touch it, and I've touched Adobe, and I've like bought in Adobe. I also bought in Oracle, but when you look at this level of debt, I think that was a terrible move by me. I have no clue what this company is, so I'm not gonna look at it because I don't want to take too much of your time. I know it's already been quite a bit. Palantir. Palantir is like one of my play where I'm being contrarian to a value investor. I'm gonna do a full breakdown on Palantir soon. That I'm gonna cover within. Hopefully, I am able to put it out this week, but we'll have to see. Let me know if you guys want to see this. Statistics. I mean, they're trading on at 78 on a forward. They say trading 130 right now. What happened? 130. God damn. 1.51 of beta. So they move a lot more than the market average. Look at this growth. From 1 billion to 192, 92% earnings growth. Look at their first quarter of 2026 compared So that was 2025. That was their growth. Now they're gonna be a three. They're gonna earn $3 billion this year easily. They'll probably earn 1 billion next quarter, which was what they were worth for a full year in 2024. Now they'll do it in one quarter. There is absolutely like no company that operates on the level of Palantir in terms of their earnings and such. So I really don't see I really don't see how um, this company doesn't continue to grow. And the reason why I love it is because the stock has dropped. When it's at 200 and the P is at 200 ish, uh, I really don't like a play like this. I find it to be almost idiotic. But if I'm able to get some kind of like a 60, 70 of forward, I kind of like this. I kind of like this. If it drops to 100, I'll be purchasing stocks. I'll be liquidating position to put into Palantir. I'll be honest with you. I see this position as I think you're paying a big premium for Palantir because it's the greatest company in the world, probably in terms of how of their growth. It is. Is it the best stock in the world? I don't think so because it's ultra expensive. But I have an average price of 75 on it right now of Palantir. I only put like, it's less than 1% of my portfolio. I don't have, um, but I absolutely love Palantir. I think Palantir's, at the price that I bought it, it is an S plus tier. At this current price that it's at 116, 178 of forward, I'm gonna put it A tier across with ServiceNow, and I'm gonna put it above ServiceNow. I'm gonna put it at S tier, and like as a value investor, that's a weird thing to say for a stock like Palantir, but I really love Palantir. I think that I prefer Microsoft overall for long term because I don't have as much downside with it, and it's gonna have phenomenal growth. And I think it's stuck that at the price that I'm in, it's gonna 2x kind of quickly. But with Palantir, I do see it 2xing. I see my position 2xing at 75. It has 2x in the past, more than 2x. Been up 130% on it, but now it's super down. I'm like up 75%. I'm definitely not selling. And if it drops below 100, I'm adding to that position. So I'm putting it at S tier here, a little bit above ServiceNow, because I just think that it operates at such a higher level than ServiceNow when it comes to their earnings that it's a no-brainer. ServiceNow is a value play. Palantir is a growth play. I think that in 5 years, Palantir is going to be $1 trillion company. I barely have any doubt about that. So yeah, SAP. I think SAP is good. It's like a big on financial software. I haven't looked at it too much. 21 of P ratio. It is sticky. I know that is very sticky. They're good with their enterprise contracts, so that is good. 18 of forward. Okay, what's that growth? What's their growth on that? Because okay, that's strong. Okay, revenue barely grew, but they got higher margins, much higher margins. That's interesting. Are they able to keep expanding margins or what? They've they've beaten on Gap EPS. It seems good. It's a software. It's kind of the same as Oracle in their software for financials, for payrolls and such. In enterprise, it's like a payroll. From what I know, global operations. I'm just not that familiar with it. I don't think it's that cheap compared to other stocks that you can look at with the kind of growth it's having. But it's interesting. They have strong margin expansion, it seems, for the past year. Hopefully they're not in the same position as I should go look with you guys at the balance sheet because important for you to do so. They barely have any debt. I'm gonna put them at. I would assume that they're around a B, to be honest, because I don't think that. I think they have a sticky software. Once you own payroll, people don't move out of it. Um, Workday. Workday now. I'm not going to expand too much on SAP because I don't have all of the details. This stock, I don't know it. So our final stock is Workday. Workday. WDAY. Here, we have a beauty of a stock. You see 37 of P ratio. Well, that's pretty expensive. But then you look at statistics and it's like 11 of forward. When you look at their growth with 11%, this is a beauty. This is an absolute beauty. They grew by 500 billion and they're at 2.5. They grew over 20%. A little bit over 20%. And now they're, they grew 20% and they're still trading at a forward basis of 11. Their latest earnings, there was some growth in earnings. Okay, that's like really insignificant growth, but 26 million in earnings for like 1 million in revenue growth. So I guess there was some kind of a margin expansion quarter over quarter. This isn't all that crazy growth, but look, they have strong. See, they miss SBC. Guys, I hate when I invest in software stocks. I hate stock-based compensation. I'm sure that's the reason why this happened. I don't look at normalized. To me, normalized is bullshit. Unless you're making efforts towards reducing the amount of stock-based compensation that you have, then everything else is bullshit. Because, oh yeah, if we didn't pay these shares to our employees, our stock would have beaten the earnings per share estimates. No one cares. No one cares. You're not beating them because you're issuing these shares. It's such a cope. Normalized EPS is such a cope in software. But they do have strong growth. What was their last earnings? Annual 2.47, 6. So they were definitely going to be growing this year as well. Like they're going to be, I think they're probably going to reach with this. If they beat on this, if they do beat on this with this kind of expected growth, they will they're gonna be probably, I assume, by the end of the year 3 billion for this year, for this annual, which would be strong growth once again. Another 500 million added to the earnings. I think that would be strong. And they are more than definitely, even if they come close to this, they're going to be making over 10 billion in revenue. So they'll probably have similar growth this year again. More than like, I think it's a little bit deceleration because it's about the same amount of points, like 500 million growth again, but it's like a smaller percentage because the number is bigger now. I still think it's a phenomenal company. I think they do own payroll. If you want to see what they do more specifically, I have a video on it. I think it's a very, very good in-depth breakdown. I did a lot of research before that. I think it's an A tier. I think ServiceNow, Workday, all of these stocks are stocks that I own. I also own Adobe that I don't like all that much now. I keep talking, I'm like, wow, I need to sell this stock. I'm going to sell Adobe, I think, but I kind of don't want to because it's a pride thing almost. Because it was one of those plays that I did as a that I found myself where I was like, wow, that looks good. And then I looked, and everyone and their mother on YouTube found it, so it's not all that cool. But yeah, that's gonna be it. Let me know if you want me to cover one of these stocks that I am not familiar with here that you own. Let me know if you want me to cover any other kind of stocks. I'm gonna keep doing tier lists, solo breakdown videos, and this is the software tier list. Let me know how you guys liked it. Thank you for watching. Comment down below and subscribe to the channel.